Yo, 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 Mina Mateo. Ho, ho, ho. Merry Christmas. What's up? Welcome back for another edition of talking about Monero and crypto and cool stuff. Hope that you guys are settling into the season. Hope that you guys are staying warm. It's getting a little bit frisky down in Georgia here. And yeah, it's always a wonderful time of the year. Christmas cards coming in and cookies are baking. And it's a great season to be alive. What else to say about it? There's a lot going on in crypto, and honestly, this video is probably not going to be as interesting as the other videos, and I know that's a great advertisement for what's to come later, but what I'm going to say in this video is probably more important than what I've said in other videos because it's very relevant to a lot of people, and it's going to impact, I think, how things are going to be done in the future in regards to crypto, in regards to how the infrastructure works. My job as a tax bro, not as a bro who works for the IRS, by the way. I actually protect people from the IRS and try to, keep the predators away from the prey, my bros. And what I see on the ground is really the oncoming of a tyranny. I mean, and this is not just me saying this as a Monero bro who has been deep into the interwebs for a while now. This is like normal tax people. I went to a tax conference, I actually went to a couple of them a few weeks ago, and you're a normal tax person now, an accountant, who is as average and vanilla and bland as you could get as far as a person goes. They're like, yeah, this is getting out of hand. Like all the reporting requirements, all the stuff coming down the pike as far as regs are concerned, it's clear that the government is trying to get as much information on us as possible. And they're trying to confine everybody into this digital surveillance system as possible. And that's what's going on. And we talked about one thing that we're going to talk about here, which is the new beneficial reporting requirements from FinCEN, which is Financial Action or Financial Crimes Enforcement Network. It's just downright Soviet. I mean, they want 30 million businesses to comply with this law. The estimated cost is about $26 billion for the first year that this is going to be implemented. And the costs are going to be incurred by, for the most part, small businesses. The time it's going to take, you have to hire accountants, maybe lawyers if your accountant doesn't want to do this kind of reporting. The report is generally fairly simple, but at the same time, there are complexities involved that FinCEN has not been offering a lot of elucidation about. And so it's going to be a mess. And the fines are insane if you don't comply with this particular requirement, which ultimately involves disclosing your personal information, the information of some of your key employees, the information of shareholders to the Financial Crime Enforcement Network. And there's already scams going on trying to take advantage of this. And, everybody at the tax conference said, yeah, this is ridiculous because criminals, you know what they do? They don't comply with laws. That's what makes them criminals. What they're trying to do is they're trying to collect more information on you. And that was generally the consensus. And, it's a sad state of affairs. And I'll tell you more about what this new beneficial ownership reporting is. It's just totally stupid. It's part of a larger, broader initiative called the Corporate Transparency Act, the CTA. And ostensibly, the point of this is to crack down on money laundering and fraud, of course, the pretext for every initiative for surveillance. And essentially what they're trying to do is they're trying to make it so that, foreign investors aren't getting as much involved in politics, and people don't have all these shell companies, and people, aren't able to get away with doing as much bad stuff as they otherwise would be able to. And of course, they're going to find ways around this. And of course, there are going to be scams involved. Everyone's going to have to pay the cost of this. And it's not the most fascinating thing, again, to learn about, but it's something that you're going to have to know about if you're a small business and you're an LLC registered with the state or a corporation. And I know that the bros that I've been helping set up businesses are setting up LLCs. And this is something that you're going to have to know. And it's just one example of many things we're going to talk about today where the general direction of everything is fairly Soviet. And there's that going on in crypto too. It's not just, for business owners, it's for everybody. It's for literally everybody, okay? And this is just emblematic of where we're going. We're going to talk more about unrealized capital gains taxes because that is now an issue for the Supreme Court. And there's an interesting case called Moore versus the United States. We'll get more into the technical details of that. But essentially, the door is open for the Supreme Court to allow for wealth taxes, depending on how they rule. Now, the general attitude right now is that they're going to limit the scope of how they rule on this so that they don't impact too much of the tax code and cause a lot of issues. But if they don't rule properly on this, that could open the door for wealth taxes and unrealized capital gains taxes and essentially the complete takeover of the Bolsheviks of the United States and a subsequent pillaging of just about everything everybody has. Because guess what? Your crypto freedom technology is going to turn into wealth confiscation technology if you're not into Monero, because if you're into public blockchains where everything you do is KYC, everything you do is transparent, can be tracked by data forensics and analysis firms, they're going to be able to literally suck the wealth out of you. I mean, that's essentially what is on the ballot for the Supreme Court to rule on. Because if you've got crypto assets and your belief is that they're a store of value and they're trying to hedge against inflation with these crypto assets, and let's say that your crypto assets go up 100% in 1 year, but the real value doesn't. It's just the dollar depreciated so that the crypto assets go up 100% in the year. Well, guess what? Your real value, that is the amount of goods and services that you can buy with your crypto, doesn't change. But nominally, your value went up 100%, and they want to tax that amount, which effectively would mean your real value would go down. And who knows, maybe you got to sell Bitcoin or your crypto assets in actuality in order to pay those taxes. And, who knows if you're on a first in, first out type of basis and, therefore recent crypto that you bought, you got to sell and you got to incur ordinary income tax gains, which are, more than the tax that you would have to pay for presumably the unrealized capital gains tax rate if you're holding it long term. And I mean, this is going to cause issues if this goes through. And they really want to do this. As we talked about in the last video, they already have an unrealized capital gains tax bill in Congress right now. It's called the Billionaires Income Tax Bill. We talked more about it in the other video. We've been talking about this since literally day one on the channel. It's the biggest threat to crypto that nobody wants to talk about. And if they make this initiative and the KYC continues to advance and there's ever more initiatives to make Bitcoin less private, you can't use mixers, and the data forensics analysis teams get more sophisticated. They start to get more contracts with the government and law enforcement and private industry and corporates. I mean, dude, you're in trouble. And Monero, of course, would go super hyper mega nuclear, as we've been saying forever. Just one of the many reasons it would. But that's something for us to talk about. So a little bit of an opener for you guys here today to discuss the topics at hand. And I know the big buzz of the day has to do with Bitcoin fees going nuclear and people not being able to transact. And you've got a bunch of people with small amounts of Bitcoin in their wallet that they can't get out of their wallet because the cost to transact is more than the amount that they have in their wallet. And somebody brought up an interesting conundrum where it's like, what if people start to sell seed phrases so that they could get rid of the value that they have in the Bitcoin wallet that they can no longer access, and then somebody has to come in with more Bitcoin, and then it just, of course, why would you do that? Because you're going to effectively just give away all the money that you just bought with transaction fees. But, it's just, of course, there are just massive problems with Bitcoin. I'm honestly tired of talking about it. There are some interesting bros out there talking about something called CTV, which I guess is part of something called BIP 119, I think is the name of it, which is something to introduce covenants. And it would be sort of like a soft fork type thing, and it would make it more private, more scalable. And I'm like, hey, you guys get this to work. I'll hop on I'll come back to Bitcoin. I'll figure out a way to integrate it back into my life here, okay? Because ultimately, I just want to use what works. And somebody commented against me because I was just going ham on Twitter about the whole high fees thing. I always capitalize on that a little bit because it's a good opportunity to take advantage of the panic out there that people have where they're starting to snap out of the cult mentality. They're starting to snap out of this delusion that they have about the future of this thing, should things not change, of course. And you can actually bring logic and reason to them because they have that instinctual panic where it's like, oh, wait, I don't think this is going to work. It's like, yes, it won't work. It won't work. Trust me. Listen to me. You got to raise the block size. You got to, do tail emission. You got to increase the subsidy somehow, or you got to do something, right? And of course, that doesn't even touch the fungibility problem, which is really the main issue. But it's an opportunity to capitalize and get people out of this thing because one interesting thing that you'll see if you pay attention to the way that the big Bitcoin bros, and I mean the big Bitcoin bros like Adam Back, the people who are part of the infrastructure of this thing, the general vibe is going to be, hey, don't worry about it. We're going to vibe it out. We think we have an idea of what's going on here. We'll build something to fix it. And, these people have $850 billion invested in this thing. 95% of people who hold this stuff probably don't understand the issues at play here. And the people who are responsible for kind of, ushering the ship forward, or at least the main figureheads, they're like, yeah, we'll build it out, man. Relax, we'll figure it out. That's literally what Adam Back said. He said, relax and get building. It's like, okay, I just have, millions of dollars invested in this thing, and it doesn't seem to be working, but hey, I'll chill out. It's cool. So, I don't worry about this, and it's fun for me because I'm not invested in Bitcoin, and, the gains don't really matter too much to me. I mean, why would they? Because it's already at an $850 billion market cap. I am hypothetically into cryptos that work and are extraordinarily undervalued for the use case that they provide. And it's not a factor for me. And the more that there's more Bitcoin panic, the more that people can maybe start to use Monero instead and just kind of snap out of it, see the value that's over here, and hop in our pool. So, there's a lot to say about the high Bitcoin fees thing, but we've honestly beat that subject to death. I don't accept Bitcoin. If you guys accept it or you guys hold on to it, cool. I don't care. It's just not for me. The privacy sucks. It's too expensive to transact, and I'm not part of the hype. So that being said, let's just get into what's actually important, which is what's going on in regards to legislation that's occurring. Elizabeth Warren wants to chase this thing down and throw it into the lake with cinder block boots, and we'll see if she can get away with doing that. But first, this podcast video is brought to you by my business, Bear Bookkeeping and Tax. Can you guys see the video? Yeah, you can see it fine. So this is my business. We do tax stuff. We do accounting stuff. We do consultation stuff. We'll teach you how to use QuickBooks. We'll do other things. And it's cool that I've been able to help so many Monero bros start up the businesses. And, 5% discount Monero if you work with me. Just saying. It's a pretty sweet deal. As seen on Monerica.com, by the way. Where is Monerica? Do I have that pulled up today? I always have it pulled up every single video, every opportunity that I could get. Yeah, that's my tweet. Yeah, I helped some people. If you haven't followed Monerica Project, go follow them. It's the yellow pages for the Monero circular economy. Some other people have talked to me about Monero Market, which sounds cool. Go check it out. That's for you. But I'm on Monerica. Love it. The guy who runs it's cool. Check it out. All right. And Monero Australia shouts out to you. He says, what are you actually buying when you buy Monero? You're buying credits in the Monero economy. You're buying credits in a private marketplace where you can get effectively anything. And that's going to be important as we move forward because George Gammon was on a podcast and he said, look, it's going to be increasingly important to have assets that's outside the system because black markets are growing all over the world as there are increasing shortages of resources. People are using black markets to buy diesel. As we've talked about in some videos, and people are using black markets in order to buy food in some cases. That was the case somewhat with the whole COVID thing was they limited how much you could buy in regards to certain things. And you had to go to alternative marketplaces, and you had to go outside the system in order for you to get access to these things, whether it was personal protection equipment, whether it was hand sanitizer even. It was crazy. And so if you have assets outside the system, especially digital assets, that's going to be really beneficial for you. And as KYC grows, as the crackdown on cash continues to occur, as we've seen over the last few years now, it's going to be really key to have Monero. And we got to get more people to understand what Monero is. When I talk to people about crypto out there, they don't know what Monero is. Like, just as a general rule, they don't know. And when you find somebody who does know, oh, they respect it. They love it 100%. And they're probably an owner of it. Although if they're a real G, they ain't going to tell you they're an owner of it. They're like, oh, yeah, I like the project. It's pretty sweet. It'd be cool if I owned some, but hey, I don't know anything about that, you know. That's why, I'm a hypothetical buyer. But in regards to the Monero economy, join up, build your business into it, get on Monerica, start accepting it, and get the circulation going. And I actually made a comment recently about research that I was doing into estate planning and that whole world, and trusts and offshore bank accounts and how all that stuff works. It's a really interesting world out there when you start to understand how the rich are able to park their assets outside the system in these legal structures that can get pretty complicated but work incredibly well for asset protection and for asset anonymity. And there was a quote when I was researching all of this that said something to the effect that the rich own nothing but control everything. And, you know, I don't know if you guys have tried to look up like what the net worth of, the Rothschild family is or whatever, but you can't find information on that. It's actually really interesting. They're not on Forbes. They're not on any of these lists. But, you go to, some, flea market, small town shop in South Georgia. I think it was Thomasville where I was. And they've got like Rothschild jam. And you look it up and, this stuff is grown in Rothschild farms. It's just like these people own assets everywhere. And most of the assets they own, they probably don't even put their name on it. They probably have it in some kind of trust out of Wyoming. And then that trust owns LLCs elsewhere that own LLCs elsewhere. And, they've got all these structures. And who knows? This laptop was probably made by a Rothschild bro. My glasses were. I'm probably sponsoring Rothschild in 10 different names right now, in 10 different ways. I mean, that's how this all works. But in regards to estate planning and offshore assets, it's amazing how easy Monero makes that. And, of course, I'm not telling anybody if you got to report something, don't report it. I'm not telling anyone that. But I'm just saying, there's a lot of avenues closing down for having your assets anonymous. I mean, I've heard some interesting strategies in regards to land trusts, in regards to slats, in regards to offshore asset protection plans and all that. But they're expensive to administer. And if you go to Switzerland, it's not as private as it used to be anymore because now you have FATCA, the Foreign Asset Transparency, Compliance Act, I think is what the acronym for it is, and that's an Obama-era law that made it so that U.S. citizens who have assets parked overseas, they have to report those assets and those foreign bank accounts to the United States and to the IRS. And you got to use FBAR forms and all this stuff. And look, if you don't report those assets, the fees, the fines are insane. You're talking about 50% of whatever you've got in those accounts, that's your penalty. And I've literally seen cases, I've read about cases where the people, they didn't report what was in their Swiss bank accounts, and somehow the IRS found out about those accounts, and they had to give up millions of dollars that they had in those accounts because the fine for not reporting these assets, and they determined to be willful, half of whatever is in your account. And there have been also court cases where U.S. courts have appealed to Swiss courts or Swiss banks, I think. I forgot exactly what happened, but effectively they were looking for somebody's assets. Creditors were looking for somebody's assets that were parked in Switzerland, and the Swiss authorities gave up information on those assets and on those accounts because the Swiss authorities are part of the SWIFT system, and the United States has that level of leverage. So you're not going to be able to get away with having assets privately overseas like you used to have, and people are going to increasingly try to look for ways that they can have wealth outside the system that is secure and safe. And there are, like I said, offshore protection asset strategies, but you got to trust these, these Caribbean bros down in the Cook Islands or in Nevis or wherever, that they won't run off with your assets. And in the research that I've done, sometimes that happens. Like you park your assets in this offshore trust, and then it turns out you can't get them on the phone a year later, and you can't find any information that you once had about these people, and they're gone. They have your money. They're somewhere in the Philippines. Who knows where they went? And so increasingly, the rich are going to look for ways to have private assets. And the great thing about Monero is that, as opposed to like an irrevocable trust where once you put the money in, you can't really get it back out, with Monero, you can get it back out. And this is just a thought that I've had in the back of my mind. Am I still recording? This is a thought that I've had in the back of my mind. I think at some point, and I almost don't want to put this out there, but because this is so useful for the use case that I just talked about, and by the way, I'm playing this into the context where if you guys start to use this stuff more, there's more liquidity, there's more avenues to get this thing into different currencies and that kind of thing. More rich people are going to find this attractive. Maybe right now it's not so attractive with the market cap and the lack of liquidity. You have to go to a weird place to get it. Okay, that's probably going to deter them. But I'm saying if it gets bigger, if it gets more well adopted, it'll turn into one of these asset protection strategies. Okay, so one thing that I am kind of worried about happening is with crypto as a whole, I don't think they would make this distinct to Monero, but maybe for crypto as a whole, as we'll see coming up here with the 8300, you could have to report your crypto assets in the same way that you report foreign bank accounts. You got to file like an FBAR report. If you've got over 10 grand in crypto, you have to identify what your wallet address is maybe. You've got to identify how much you have in there. And yeah, I mean, who knows if they make that a thing? They're already making it a thing. They're already integrating crypto into the Bank Secrecy Act. And some people think that this is something that's part of Elizabeth Warren's new bill where she's trying to crack down on crypto. And I think it's called like the digital assets, something. I forgot. We'll get to it. I have tabs on. But they think that that's coming. And it's like, no. They already passed the infrastructure bill, which had this part of the bill which made it so that come in 2024, January 1st, just a month from now, if you receive $10,000 in crypto in the same way that you receive $10,000 in cash, you've got to file a Form 8300, which means you've got to collect personal information on whoever gave you that money. And, that's pretty Soviet. Yeah, I know. But think of the compliance, again, that goes into having to, deal with all of that, especially if you're an exchange or who knows who they're going to make this apply to. Are they going to make it apply to wallet providers? Are they going to make it apply to who? So if they can already do that, and it just slips under everyone's radar, everyone's worried about the Bitcoin fees going nuclear, why wouldn't they be able to pass a bill making it so that some people have to file an obscure form that nobody understands except for us tax pros and rich people who do these kinds of transactions? Who's going to really fight up against that, especially with everything else going on? So we'll see if that happens. I think I'm the only one who's actually put that into the ether, so please forgive me for that. Hopefully there ain't some regulatory bro listening to me, but I think that could be a thing, unfortunately, at some point. Maybe you want to prepare for that, where maybe you have to report your crypto assets on an FBAR, foreign account report, and that would cause problems. But, hey, Monero is awesome for that reason. People will probably buy Monero again. That would probably increase demand. So, moving on. Shouts out to the Stoic XMR. Michael Fitzgerald is your name. he came out with the book, the Monero Standard. It's out. Go get yourself your copy. I bought my copy. And Michael was nice enough to give me a couple extra copies, and that's really nice of you, Michael. I know people who I want to give them to, okay? I got some psyched up Monero bros here in the ATL, and it would make a good Christmas gift. Assuming I get it on time. If not, it'll be a belated Christmas gift, but they're going to love it. And I said I was going to read it, do a review, so I'm excited to get that, brother, and read it. Go get yourself a copy. It'll be sweet. We still recording. All right, so are we into the stuff yet? Okay, here we go. Starting out, Justin, U.S. Senator Warren introduces crypto crackdown bill. And I've got a little bit of a page pulled up here about some of the facts about this. And of course, what's the reason for it? Money laundering, trafficking, sanctions evasion, blah, blah, blah. The same old, right? Fraud, of course. Elder fraud. I don't even know what that is. Ripping off old people? Oh, man. So the old people who run the central banking system, they don't want us getting in on their turf. Of course, they're worried about us scamming old people, not the old people scamming all of us, which is essentially what Social Security is. And by the way, at the tax conference, there are a lot of new regulations related to something called the Secure Act. It's called the Secure Act 2.0. And they're coming out with all of these ways that employers can help their employees fund retirement plans and emergency saving plans and all that. And it's good off the bat, but we talked about at the conference why they're doing this, because Social Security is running out. And it's running out quick. And what they want to do is they want to have the private sector start to take over some of that slack. And so you're going to see a lot more regulations allowing for people to get more money into the stock market, get more money tax deferred into emergency savings accounts for people, and for anything that supports the old folks who really didn't save anything for retirement and are going to continue to charge us 15.3% every year with self-employment tax and Social Security and Medicare and all that. So just a few facts about this bill. This was sponsored for the most part by the Banking Committee, and the bankers are working with Senator Elizabeth Warren on this bill, as you would expect. You know, Jamie Dimon at J.P. Morgan is notorious for being anti-crypto, and he's on the team. In the bill, it says the lack of basic legal safeguards around crypto opens up Americans to countless risks. Now, I will say this. The crypto industry kind of did it to themselves, okay? And look, I'm a free market kind of guy in many cases, but I will say this. People getting rich off rug pulls, all the hacks going on with DeFi, all the dog coins and the meme coins, and just all of this leads to these people having a justified case, at least politically speaking, in the public. Okay, if people just wanted to use crypto for the original use case that it provided, obviously that would present a threat to these people, and they would have come after it anyway. But I'm just saying, now they have that public justification, because if we stayed with the original ethos that, hey, we don't want to use banks, we just want to transact with each other, do you think the public would be for or against that? Do you think the public would think that would be stupid? No, they'd be all for it. And we had the public support for a long time. But now if you talk to average people, I don't know if you guys are actually out there talking with average people. I know that a lot of people got rich in crypto and they kind of just like check out. They sit on the internet. They're in these like worlds where everyone's into the crypto. But if you talk to average people, they think a lot of this crypto stuff is stupid, which is why I made a tweet. Like I said, it's easy to sell people on Monero if you know what you're talking about and you know about this stuff and you can sell the use case. But you kind of have to justify what you're saying by hand waving away like the entire crypto space outside of Monero. And I know that sounds culty, but that's kind of what you have to do. You have to actually make it seem like you're a mature adult who's not a total gambler, who's not a moon boy, who actually understands some of the technical elements and some of the philosophical elements and the context of the banking system and central banking and all that in order to make sense to some people. And I've been able to sell a good number of people on Monero because of the whole private P2P use case. But when you start to go into the store of value thing and you're talking about how your favorite crypto, you have to pay $40 to make one transaction and, oh, I love Dogecoin. Like, people are going to roll their eyes because FTX, Mashinsky, bro, with Celsius, all these guys have done a number on us. Okay, let's just be honest. And it's because of these people that we now have to deal with stuff like this. And a lot of the public is actually like, yeah, you know what? Maybe there does need to be somewhat of a crackdown on this because it's kind of out of hand. A lot of people have lost a lot of money. There have been a lot of scams, So, yeah, now they're going into the typical propaganda has become the payment choice of terroristas and cartels and authoritarian regimes. And we've heard that stuff forever, of course. But let's get to what they would actually do. Check this out. This bill, the Digital Asset Anti-Money Laundering Act, would extend Bank Secrecy Act responsibilities, including know your customer requirements, to digital asset wallet providers, miners, validators, and other network participants that may act to validate, secure, or facilitate digital asset transactions. So that would be basically everybody, as far as I'm concerned. And this is what we were talking about, I think, however many years ago. I think it was 2 years ago. I forgot what exactly the bill was. I think it was part of the infrastructure bill, but there was debates in Congress with some people, and they came out with a more relaxed version of what they were talking about in regards to know your customer. I remember it very vaguely, and Janet Yellen was commenting on it, and she wanted the more harsh interpretation of the law, and somehow they were able to come out with Treasury guidance that made it somewhat eased, but this would kind of call or summon the same process because check it out. Asset wallet providers, miners, validators. I mean, you validate a transaction if, you're staking, right? So how are you going to get this information on people? And how do you know what you're even, I mean, that gets in, like, yeah, that just gets too crazy, right? And what is going to happen is they're going to make these laws. The laws are going to be ambiguous. And I remember Coinbase recently reaching out to the SEC looking for clarity on some regulations. And the SEC came back to them and they're like, hey, we're not going to provide transparent regulations or clarity on these regulations. And Coinbase sued them back and they're like, dude, we're just trying to follow the law here. But you know what? They're going to make it so it's vague. You know why? Because if it's vague, that means it's open to judicial interpretation. And that means that people are going to be in a state of uncertainty. Because there's no clarity, there's uncertainty, and uncertainty pulls people away from the space. Because if there's not clarity, then people are not going to risk going to court for doing something wrong because a lot of people don't have the money to deal with this kind of stuff. You get caught up in court, somebody sues you, that could bankrupt you. Easy. And it could be that with stuff like this that covers asset wallet providers and miners and validators, network participants. Look, it says other network participants that may act to validate or secure or facilitate digital. That's everybody. I mean, how do you know you're not violating the Bank Secrecy Act? Have you seen the penalties for this? It's insane. So what this would effectively do is scare people away from the space. Next, address a major gap with respect to unhosted digital wallets. So they want to get rid of self-custody. Unhosted digital wallets, that means you own your wallet. Unhosted, non-custodial, that's what that means, okay? So, which will allow individuals to bypass AML and sanctions checks by directing FinCEN to finalize and implement its December 2020 proposed rule, which would require banks and money service businesses to verify customer and counterparty identities, keep records, and file reports in relation to certain digital asset transactions involving unhosted wallets or wallets hosted by non-BSA compliant jurisdictions, non-Bank Secrecy Act compliant jurisdictions. Okay. So they're going to make it so that, hey, you want to have an unhosted wallet, you got to give up all your information. And then they're going to track what you do with that wallet. There are going to be tracers everywhere, seeing what everyone's doing. And the IRS now is implementing artificial intelligence. And so that's more information that they can input into their system. And it's going to go the way of total surveillance. Now, I don't know if this is going to pass. But then again, we've already seen crazier things. And the Democrats seem to be intent on keeping control and expanding their control. And with the way things are going now with demographics and how this current election process is going, the tricks that they're pulling, it could be that this kind of thing is going to get kind of normalized. And let's continue direct fine sent to issue guidance to financial institutions on mitigating the risks, blah, 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 strengthen enforcement of BSA compliance. They want to establish an AML CFT compliance examination review process for money service businesses. And by the way, money service businesses, we're talking about PayPal and Venmo and Cash App. And who knows what they would expand money service businesses to. Are those going to include Lightning Network custodians? We'll see. I've heard some arguments that Lightning Network node operators are money service businesses. We'll see how that goes. And other digital asset entities. So they just say other digital asset entities. Again, kind of vague. With BSA obligations, yep. Oh my gosh, dude. Okay, I actually didn't read this before. This is what they want to do. Oh my gosh. Check this out. It says extend the Bank Secrecy Act rules regarding reporting of foreign bank accounts to include digital assets. Okay, so you can already know where they're going to be going just by kind of knowing the context of things, which is why we've been so far ahead of the curve ever since day one. We understand the situation that the United States government is in and governments around the world, okay? They don't have a lot of money, okay? Inflation is becoming a problem, especially for the bond market. Inflation continues to go up. That causes problems with people holding these bonds because the real rate of return is going down. And the bond market is what holds, for the most part, civilization together at this point. And they're going to need to raise revenues in some way other than printing money, which means they're going to have to increase taxes, which means they're going to have to know where your money is in order to tax it. And so if you kind of know that context, then you can see stuff like this coming. You can see why Monero is going to go super, hyper, mega nuclear. But check this out. If you've got crypto, okay, so let's actually read the rest of this, okay? So it requires United States persons engaged in a transaction of value of $10,000 in digital assets through one or more offshore accounts to file an FBAR report. Okay, so what is considered an offshore account? Because there are some wallet providers not based in the United States. There's some exchanges not based in the United States. Okay, and it requires persons engaged in a transaction. So who has to report this? Is it the people who receive the money or the people who spend the money? Value greater than $10,000 through one or more offshore accounts. And guess what? Like I said before, the penalties for not complying with the Bank Secrecy Act are insane, okay? Could bankrupt your average person out there. What's it like? 60, 70% of Americans can't cover like a $600 emergency. Guys, now, are they going to be transacting tens of thousands of dollars crypto? Maybe not, okay? But still, I think I read if you don't comply with the Bank Secrecy Act, like the lower fine is like $30,000. So, I mean, what does offshore mean? Tell me what that means. Because we're talking about crypto here. It's not a national type thing. It doesn't have borders. So what does offshore mean? We're going to need some clarity on that. So we could go on through this more and more, but you see where this is going. They're talking to senior intelligence officials about crypto's threat to national security, and they're using Sam Bankman-Fried from FTX as a scapegoat. Okay, so that's what's coming. Wow. So At a tax conference today, and this is me talking, a new 1099 form for digital assets was discussed. It's going to be called the 1099-DA. And the threshold for broker issuing this is apparently a single crypto transaction. So, yeah, that's what they talked about at the tax conference. If somebody on an exchange does a single transaction, they're going to get a 1099-DA. And when you get a 1099, if you don't know, not only do you get that form, but so does the IRS. And those 1099s could be wrong. And this was the whole issue with this $600 1099 reporting requirement for the money service businesses like PayPal and Venmo and Cash App. Before they reneged on this initiative recently in the last month, it was going to have to be that they would issue a 1099 if you had transacted over $600. And most of those 1099s, they probably would have been wrong. And at the tax conference, they said, hey, the first couple of years they do this 1099-DA thing, the basis in your crypto is probably going to be wrongly reported. So you're going to have to fix that on your tax return. How much you received may be wrong, the proceeds. Whatever they calculate for capital gain loss probably is going to be wrong. You have to manually calculate it. And so there's going to be many problems with this. And as I said here, furthermore, they say that the 1099-DA will not classify a transaction, i.e. no detail as to whether or not the transaction is from a sale, a gift, a hard fork, a stake reward, etc. So what if somebody gifts you through the exchange, they go on the exchange, they buy Bitcoin, they send it to you, and they want to classify it as a gift? Well, guess what? You're going to get a 1099-DA for that. And the 1099-DA can make it look like you sold that crypto when really you gave it as a gift. And the IRS is going to be anticipating that you report that. So even if you're under the gift tax annual exclusion, which I believe in 2023 is $18,000, or in 2024 it's $18,000. I got to look it up. To where if you gift under that amount, you don't have to file a gift tax return. Well, you're going to have to notate on your return that this was a gift, because otherwise the IRS may think it's a sale. And because they have that on file, and because they're putting these 1099s into their automated system, you may get an IRS notice if you don't report it, and you may not have reported it properly. So that's something to consider, okay? And this is going to be coming, I think, in 2026 is what they said. And we'll get to the Form 8300. Real quick, a little tax planning tip for you guys. We're getting to the end of the year, which means people are deploying tax planning strategies for lowering taxable income. One of those things, real quick, is if you've got appreciated crypto assets or appreciated assets in general, you've held those assets for longer than a year, what you could do is you could donate those assets and you can get a deduction for the fair market value of those assets. And who knows, maybe you made a lot of money on those assets. Well, it could be that you want to get around the capital gains tax that you would otherwise have to pay if you sold those assets. And what you could do is you could get an advantage on the capital gain that you got by donating it to a qualified charity, 501c3, and then you can deduct that on your Schedule A. Now, the standard deduction is pretty high. I think it's about $13,500 if you're single, about $27,000 if you're married. So, if you're married and you're not itemizing, maybe you won't get that much of a benefit. But if you're already going to be going over that $27,000 for itemized deductions, which is kind of hard to do now with the state and local tax cap of $10,000. But if you're able to go over that $27,000, heck, you may be able to get a big deduction for donating some appreciated speculative crypto assets that maybe you think are going to go down in the future. You can take advantage of that fair market value donation. Okay, but here's the problem. Here's the catch, right? And the IRS, and somebody commented when I posted this, they're like, it seems like they're trying to make it as miserable as possible for anyone to get involved in crypto. It's like, yeah, effectively. So check this out. This is Crypto Tax CPA, MICA frame. IRS appraisals required to deduct crypto donations. Okay, so think of how stupid this is. You need to hire an appraiser in order to validate the fair market value of the crypto at the date of donation. Isn't that wild? Now, maybe they're worried about people putting different dates on, when they donated the crypto to somebody. because maybe the valuations fluctuate quite a lot during the year. And so people want to take advantage of, obviously, when that price was highest. So maybe that's the reasoning for it. But what does the appraiser do? Well, he looks at the freaking CoinMarketCap website, and he goes to your crypto and sees what the valuation does on the particular day that you donated it. And guess what? You're probably going to pay that guy, $500 for that qualified appraisal? Insane. But check it out. It says qualified appraisals are required for any donation of cryptocurrency exceeding $5,000. The IRS also noted that if a taxpayer failed to obtain an appraisal, they would not qualify for the reasonable cause exception. And it says this creates a significant barrier for crypto investors hoping to donate their assets. So again, they're trying to make it more difficult for everybody to get any benefit out of crypto. And that's what's going to happen. They're not going to outright ban it because that'd be too aggressive, but they're going to slowly nibble away at it to the point where you wake up, you ain't going to be able to stack sats unless you're trying to invest $1 million because your transaction fee is going to be freaking like $5,000. Even then, the government's going to know that you're doing the transaction because the only option you have to get it is through a centralized exchange that is doing total freaking crazy KYC on you. And by the way, they're going to report a Bank Secrecy Act report on you, and you're going to have to file an FBAR report. And if you want to donate some of your crypto, check it out. You got to hire, IRS appraiser bro down the road and get yourself a qualified appraisal. It's just crazy. Moving on. This is from James Yoakum, CPA. Cash transactions over $10,000 related across time or within 24 hours have to be reported to the IRS via Form 8300. For everyone thinking cryptocurrency as we see it now is going to be utilized by banks or businesses, bad news. Come January 1st, 2024, digital assets equals cash for Form 8300. So you can't equal cash in the context of you transacting cash because, well, obviously you got to pay capital gains on every single transaction you do. And you've got to, of course, this is tracked and traced. Anything done on the blockchain will be used against you. And so if you don't report all your transactions, who knows? Maybe you get a 1099 DA that shows every transaction you have to the IRS, right? Well, unfortunately, it's considered cash in the context of the Bank Secrecy Act reporting requirements. So let's go check this out. Let's see a little bit more about this, okay? Here are the penalties for Form 8300 noncompliance. For persons with average annual gross receipts where was I? Oh, here we go. 2024 civil penalties and applicable rules. The penalty for negligent failure to timely file to include all required information or to include correct information is $310 per return, not to exceed $3.7 million per year. For persons with average annual gross receipts of not more than $5 million, the ceiling is $1.2 million. The penalty applies to each return. Okay, so $310 for every negligent failure. Okay, so that's assuming you don't know about this, you're just some bro. But check it out. This is for intentional disregard. That's when you get into trying to figure out what motive is and if they think you intentionally disregarded rules and that kind of thing. Penalty for intentional disregarding of the requirement to timely file or to include all required information or correct information is the greater of $31,520 or the amount of cash received in the transaction not to exceed $126,000. Okay? And the penalty applies to each failure. So that's pretty significant, right? Now, who knows how lenient they're going to be on this? In regards to negligible reporting. But, let's say they get you for a negligible non-reporting for a couple reports at $610. Penalties and interest compound on each other for a couple of years. You could be talking about a few grand. So that's something you want to kind of know about it. Moving on. Let's see if we can find... Okay, so now... Let me get a drink real quick. Beneficial ownership information. All right, and as you can see, this is the Financial Crimes Enforcement Network. Our saviors, our protectors, our great guardians. Starting January 1, 2024, many companies will be required to report information to the U.S. government about who ultimately owns and controls them. And the definitions of who is considered a beneficial owner are still somewhat unclear in some contexts. Like I said, if you got somebody who's running your company's payroll, they could be considered a significant person in the company. Maybe you need to get their personal information filed. C-suite executives probably going to file into this, and we're still looking for more information. There are initiatives right now to have this rule pushed back a year because of the lack of information that we have. But check this out. FinCEN has been notified of recent fraudulent attempts to solicit information from individuals and entities who may be subject to reporting requirements under the CTA. The fraudulent correspondence, so you already have fraudulent correspondence. It asks the recipient to click on a URL or scan a QR code. These are fraudulent, and people are already losing money because of the fraud as a result of the government's stupid initiative to get more personal information about you. And Comcast recently, if you guys didn't hear, had a hack where 32 million customers were affected. Just amazing. But here's a page about this beneficial ownership requirement as part of the Corporate Transparency Act. And this was like burrowed in to this bill. Like nobody knew about this until like last year for the most part. Like everyone's like, hey, you guys read this? Oh yeah, I read something about that. That sounds kind of crazy, doesn't it? It's like, oh wait, this is actually happening. This is a real problem. And so check it out. Who has to report? Companies are required to report. Companies required to report are called reporting companies. Seems pretty straightforward. Reporting companies may have to obtain information from their beneficial owners and report that information to FinCEN. And any reporting company is qualified as such: a corporation, an LLC, a limited liability company, or was otherwise created in the United States by filing a document with the Secretary of State or any similar office. Okay. So that's 32 million businesses from what I've read. And are all 32 million businesses going to know about this? Let's keep going. Where are the penalties for this? Oh, of course, they don't list the penalties because they know that would spook people. If your company was created prior to, now this is important, listen up. If your company was created or registered prior to January 1, 2024, you have until January 1, 2025 to report BOI. So you have a year if you created your LLC or incorporated prior to 2024. But if you incorporate or create your LLC after 2024, you have 30 days of the creation of registration to file this report with FinCEN. Okay? And I didn't see the penalties anywhere here, but the penalties, for those of you who don't know, are $500 per day the report is late, up to $10,000. So just imagine, okay? And by the way, this 30 days, I think, was moved to 60 days, but you're going to have to check that. None of what I say in this video is tax advice. None of what I say is any kind of advisory or consulting or whatever. Go get a professional to check this stuff out for you, okay? Just covering my ass, but people are going to wake up a year from now in 2025 to do their tax return, and it could be that they owe $10,000 to FinCEN or whoever you got to pay the fine to, because nobody told them about this. Now, FinCEN is out there, and they're saying, hey, we're going to focus on education. This is what they were saying at the tax conference. Not FinCEN, but our presentation of the information that they exhibited to the public. They said, we're going to be lenient on the fines. We're going to focus on education. We're going to understand a lot of people aren't going to report because this is a new thing, blah, 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 blah. Now, who knows how long that grace period is? Nobody really knows. And like I said, the government needs money. If they wanted to be total buttholes about it, they could. How many years is that going to allow people to get by? And for whatever reason, they figure out that maybe you just didn't want to file it for whatever reason. Okay? Big problems, big penalties. So go to your tax professional if you own a business. Go to maybe a lawyer to talk about this kind of thing. For for me right now, I'm not going to do these reports, personally speaking. Me as an accountant, I'm not going to do these reports. You're going to have to find somebody to do it, or you're going to have to do it. There are some websites that people are recommending. CorpNet, I think, is one of those websites, sort of like one of these compliance annual filing type companies that helps with that kind of thing. But a lot of insurance companies are not covering accountants who do this kind of work because, according to a lot of insurance companies, this is practicing law effectively, this kind of stuff. I suspect that they'll make it easier to report in the future, but without getting too much into this, this is more or less just me telling you guys you're going to want to look into this because this is a real thing. This is something that's going to affect a lot of people, and you're going to want to be on top of this, you and your team, okay? And I know I didn't give too much information as to what goes on the report and who is, somebody to be on the report. That's for you to research. And FinCEN, again, needs to issue more clarity. All right. So moving forward, this is probably the biggest Supreme Court case that is current right now. And this is after the whole Trump thing, with Trump, I guess, being kicked off the ballot in Colorado. I mean, that, to me, is not as big a deal as this case right here. And let's read about it, okay? This is from the Epoch Times, reposted by Zero Hedge. Matthew Vedum, thank you. The Supreme Court will take up an important but little notice case about unrealized quote-unquote income that considers the constitutional limitations on federal taxing power. The case is significant because the court could strike it down using the mandatory repatriation tax, also known as the transition tax, which is basically a one-time unrealized capital gains tax. And it's interesting that this was put into law by Republicans. Okay? Very interesting. This is why I don't do the whole Republican and Democrat thing for the most part. Because, who did the vaxxes? Who did the shutdowns? Who printed all the money to pay for all this and causes subsequent inflation? Okay? Now, it was the Federal Reserve for the most part, I understand. But these were Republicans who did the first, effectively, unrealized capital gains tax. Now, it was a one-time tax on foreign corporations that had all this money, and effectively what happened was people who owned shares in these foreign corporations, they didn't want to bring that money back to the United States. They wanted to keep that money in the foreign corporations because the tax rate was too high here in the United States, and if the income passed down to the U.S. shareholders, then they would have to then pay the tax in the United States. And effectively what they did was they just kept it there. But what this tax did was they taxed those retained earnings that were kept by those corporations overseas, which was effectively a wealth tax, okay? But it was like a one-time wealth tax, and that was before, they lowered the corporate tax rate down to 2021 to incentivize more corporations to come on back and all that. And this is talking about the wealth tax proposal by Senator Ron Wyden that we talked about in the last video. And the left-leaning Institute on Taxation and Economy Policy said the case could become the most important tax case in a century. A broad ruling could destabilize the tax system, and the concern for the left-leaning Taxation Economy Policy Institute was that this would enrich many corporations if they did a ruling that didn't allow wealth tax. So in other words, the court ruled against this repatriation tax effectively. And so, a couple of the justices, Sotomayor in particular, who is one of the more liberal justices on the Supreme Court, she was like, wealth tax, of course, we're totally allowed to do that. This is totally constitutional, everything else like that. Because the lower courts they sided, of course, with the United States, and they said, yeah, the Moors, you guys who have to pay this repatriation tax, even though it's only like, I think it was a small amount, like $16,000 or something like that. It wasn't a lot, but they took up a case. They're like, hey, this is ridiculous. We shouldn't have to pay this. We're just some people who helped some startup company in India, some of our friends, and we didn't even think to distribute those profits from the business. We just wanted to keep it over there and help them out. It was more of like a charitable thing, actually, even though it was really an investment. But they had to pay this repatriation tax. They weren't expecting to pay 16 grand, of course. And so the earlier court said, yeah, you got to pay the 16 grand. Now they're at the Supreme Court. And if the Supreme Court says, yeah, you got to pay the 16 grand, and this repatriation tax, this one-time wealth tax, is perfectly valid, from how I understand the case, that's going to open the door to unrealized capital gains taxes and wealth taxes. This will be the precedent for that. And we could read more about offshore tax dodging by corporations and the 2018 law would lead to corporations to have a one-time tax liability of $347 billion. Think of that. Just kind of reading through this. Yeah, so the Moors ended up in court after they invested in an India-based company founded by a friend. Isn't that wild? Yeah, so the tax bill that they didn't expect to get was $14,000. Isn't that amazing? The little people who don't take just a little bit of crap, they're the ones who make big change, don't they? These people could be the ones to save us from unrealized capital gains tax, even though these predators will probably find a way around whatever happens here. But let's move forward. Although such profits aren't ordinarily considered income unless shareholders receive dividends or sell the shares for capital gains, or for a capital gain, the MRT attempts to tax these funds as income by simply declaring them to be taxable income, which is legal fiction according to the CEI. So there's some disagreement here. And, I was at a bookstore this weekend, and I haven't read this book yet, but I just got it. I've heard about it forever. It's a book by Irwin Schiff, and if that name sounds familiar, it's Peter Schiff's dad, called, I think I actually have it over here. Yeah, let me see. Yeah. You got to make sure the CPA you work with has this book on their bookshelf, The Great Income Tax Hoax. And effectively, this goes into the history of the income tax and why it's unconstitutional. And, I haven't read it. I can't make a claim on it, just for legal purposes, pay your taxes, okay? But this goes beyond that, okay? This goes way beyond income tax, because the question is whether or not the tax is even realized yet. Income tax, obviously, it's realized. You earned the income, you realized it, therefore you report it. But this, it goes beyond the principle of realization, which is the crux of the issue here. The 16th Amendment authorizes Congress to tax shareholders pro rata shares of undistributed corporate earnings as income. But legal experts suggest the 16th Amendment is the obstacle that could be the tax's undoing. And this goes into the history of the income tax. Okay, so I'm not going to get into the thick of this case. You can read up more on it, but we've talked about the implications of what would happen if they uphold this unrealized capital gains tax. It'd be a big problem. And this is a little bit of a thread I did on this case, reading an article off Forbes. This is from this article, and it's off Forbes, and I would read you the... Howard Gleckman is the author. Moore's lawyer agreed, quote unquote, that it may be permissible for Congress to impose mark-to-market taxes on increases in the value of certain futures contracts, even if they're not sold. So the lawyer fighting against the unrealized capital gains tax on the behalf of his client Moore, which is the person who had to pay the $14,000, he conceded that it may be permissible for Congress to impose mark-to-market tax, which is essentially unrealized capital gains taxes, on increase in the value of certain futures contracts. Now, I didn't know that. If that's a thing right now, I didn't know it. Maybe he's making that case that certain futures contracts could be subject to unrealized capital gains tax. I'm unaware of that, but hey, maybe it's a thing. And I know traders right now, if your profession is a trader, you can actually make an election to be taxed mark to market. You can actually elect into an unrealized capital gains tax system, but you also get the benefit of the losses too. So it's an interesting thing because that's sort of like your job. But quote, Justice Sonia Sotomayor would simply conclude that there is no constitutional requirement that income be realized before it is taxed. That's what the Ninth Circuit Court of Appeals decided when it rejected Moore's first appeal. So she's agreeing with the lower court that, yeah, there's no constitutional requirement for income to be realized before it's taxed. Basically saying unrealized capital gains tax, perfectly okay. The justices, quote unquote, could ignore the wealth tax issue entirely, or as Rosenthal and others fear, they could toss in a footnote that suggests the constitutionality of a wealth tax remains an open question. Those words could then be cited in some future cases. So it's all about the scope by which they measure this thing and how they rule on this thing. If they have a very limited ruling on just the details of this particular case that very individualistically applied to Moore, then maybe it wouldn't be as big a problem, okay? But who knows how they're going to rule? Who knows? We've seen some pretty wacky stuff out of the Supreme Court. When the 16th Amendment was ratified, and this is Peter putting this in the context of the income tax, when the 16th Amendment was ratified, if anyone thought for 1 second that unrealized gains in any asset could be taxed as income, there is not a single state that would have voted in favor of it. Government will abuse any power it has, never let the camel's nose under the tent. Yeah, I mean, just insane. And, Peter goes into detail in this court case here. He says, if the Supreme Court rules in favor of the government, that is the lower courts, and allows it to redefine income to include any unrealized appreciation in any asset, then it will grant the federal government a new power to nationalize the entire asset stock of the nation. In hyperinflation, the only refuge people have is the ability to hold real assets and never sell them. But if the federal government can claim unrealized inflationary gains as being taxable income, then almost all Americans will be forced to sell their assets just to pay their tax liabilities. But with all the assets up for sale at once, the most likely buyer will be the federal government itself, which will pay in near worthless paper. And by the way, who's the federal government going to give that to? Who's the federal government in debt to? China? Foreign investors? People who buy our bonds, right? So, in one decision, the Supreme Court would have rendered the Constitution meaningless, effectively eliminated private property. I think he meant eliminated private property rights and provided the federal government with the legal mechanism to pull off a communist revolution without having to fire a single shot. So yeah, this is a big deal. So we'll see how they rule on it. It comes in 2024. Very big deal, okay? But just remember, if this happens, okay, there's going to be a panic to get into Monero as quickly as possible. You have to understand the context of this. And the environment right now is you have all these dots everywhere, okay? We've been talking about all these dots, all these reasons to get into Monero, the context and everything, the macroeconomic case, forever. For 3 years, we've connected millions of dots at this point. All it takes is for people to connect just a few of these ever-increasing dots for them to say, hey, this private digital currency is a pretty good idea. Then they start to look into it. They're like, wow, they figured out the scaling as Arctic Mine harps at all the time. That's why he got into Monero, one of the great, brilliant minds of our space. He's like, yeah, I didn't even get in for the privacy. I got in for the scalability. The privacy was like an extra benefit because of the dynamic block size and the tail emission. Oh my gosh, you can mine the stuff with a laptop. You don't need all these freaking ASICs machines. this is crazy. This is like the seventh wonder of the world, or eighth wonder, whatever. And then more people buy into it because maybe they start to see the price move. And then at some point, the trickle turns into a flood as people realize that this crypto has the ability to protect assets almost unlike anything else. And you can transact very cheaply. You don't have to pay $40 per transaction for this stuff. And you can become part of the Monero circular economy, which is growing ever more. And you could be effectively off the system. And look, if this stuff comes to pass, I don't know if I'm going to have a YouTube channel talking about this stuff anymore. Who knows what the consequence will be to be out there chatting about this stuff. You'd probably be investigated in every way possible. And I always encourage people to follow law every single video that I make. But I'm just saying, look, people are going to ape into this stuff. People are going to freaking panic into this stuff. And we've told you guys forever, if there is an inelastic demand, there are people using this because it has a unique use case. I think there is just another dark net marketplace that was shut down. They use Bitcoin. And, you know, the marketplace that's taking its place is a Monero-only marketplace. Increasingly, this is a trend that's been happening for years now, where if you want to go into certain marketplaces, you have to use Monero. It's the only crypto used in some circumstances, which means it has a price floor, which means it has a store of value component, which has implications for what I talked about earlier with asset management and protection. If it has certain reasonable expectations to be used in the future, then that means you can reasonably hold it now and preserve your value to a certain degree. And it almost is like a stable coin. It's become sort of like a meme in the Monero land. It's like this thing doesn't lose value or gain value. It's been at like $150 to $200 for like the last 3 years. It's pretty crazy. But it's not really a speculative asset, which is great, actually, because that makes it so that people just kind of stay into this stuff. But look, when people realize that you can't get anything else like this, for the most part, Monero, and the benefits are such that you can escape a communist, revolutionary, hyperinflationary pillaging, or you can get access to the black markets when the resources dry up because of mismanagement or price controls or whatever. Dude, like I can't begin to tell you just how freaking hyper-nuclear this is going to go. Like, it's going to be a panic, as I told you. And it may even get to the point where it's like unobtainium. You can't even get it. Nobody will trade anything for it, except for maybe like gold and stuff like that. And I'm a big fan of gold and a big fan of silver. Don't get me wrong, because they're private assets at the end of the day. And I know I've had some people tell me, but Matt, what if they fly a plane over your house and they have like some, geothermal type of radiological, surveillance tool to see whether or not you have certain metals in your house? I mean, at that point, I don't know. You got to invest in surface-to-air missiles, I guess, at that point. But, joking, okay. But, it's, I just feel so confident that people are going to figure this out at some point. I'm telling you. And I know I've been saying that forever, and I know we as a group have been saying that forever. And I know to a certain degree we don't really care because we're going to use this stuff anyway, even if people don't figure it out. But I'm telling you, dude, like people are going to piece this stuff together. The fungibility element, the dynamic block size and the tail emission creating low transaction costs, the asset protection and anonymity element to it. I mean, I'm telling you, this is where it's at. So let's move on. Yeah, commented on that. Oh, yeah, there's a new FASB accounting rule. If you don't know what FASB is, it's the Financial Accounting Standards Board. And they basically set the rules for what GAAP accountants are supposed to do in accounting world. And they issue these things called ASUs, Accounting Standards Updates, where they inform accountants as to new ways things should be recorded and treated for financial purposes, financial reporting purposes. So, Watcher.guru reports cryptos to be measured at fair value under new FASB rules. And some of you guys were concerned because you thought maybe this is sort of like an unrealized capital gains thing, because if you have crypto on your books and you have to do what are called fair value adjustments at the end of each year, then you're going to have to pay tax on assets that you haven't sold. From what I understand, and I did try to look for confirmation on this, but from what I understand about just accounting world in general, before this was even a thing, when you do these fair value adjustments, they do indeed go to an unrealized gain or loss account on the financial statements. But that doesn't mean that those amounts are included in taxable income, okay? Because you do have book-to-tax adjustments that you do in order to figure out what your taxable income is as a corporation. And I would be surprised if you include unrealized gains or losses from crypto or other trading securities on your net income, okay? Go look that up. I'm not giving tax advice, but I'm just saying I don't think that's how it works, at least for now, right, with everything we just read. But what was interesting was that the amendments in the ASU, and this is according to the FASB website, the source, they said the assets have to meet all the following criteria. They're talking about the crypto assets to be measured at fair value. 1, meet the definition of intangible assets. 2, do not provide the asset holder with enforceable rights or claims on underlying goods, so they're not a derivative of sorts. 3, are created or reside on a distributed ledger based on blockchain or similar technology. 4, are secured through cryptography. 5, are fungible. Now, that's a funny one, guys. Isn't that funny? It's almost like we in the Monero sphere are the only ones who understand this issue. Because at the tax conference, we were talking about non-fungible tokens. And non-fungible tokens for tax purposes are actually going to be treated a little bit differently than your standard crypto. And it comes down to that fungibility element. And because non-fungible tokens, which they consider in many cases to be like artwork, which means they're taxed with a collectibles type of consideration, which means the top rate is actually 28% instead of the 20% for long-term capital gains for other assets. The fungibility element plays a factor in that, and they get it wrong because they claim in their publications that Bitcoin and Ethereum and all these other cryptos are fungible, and that makes them different from non-fungible tokens or NFTs. And it's not right. It's obviously not right. I mean, look at what's going on with the ordinals. Look at what goes on every day with Ethereum. They're inscribing unique things into every single block. And so, these transactions, and this is before the ordinals thing, by the way. This is like you can track transactions, and if they were involved in certain activity, then, it could be deemed to be a dirty Bitcoin or a dirty, transaction, or UTXO, and therefore exchanges can, discriminate against that UTXO and shut down your account. And we've gone through all that a million times, and you can distinguish which cryptos were involved in what activity and make different value judgments on those cryptos, and therefore you have a fungibility problem. Okay, but so they get that wrong. Not only the IRS, but also FASB and also Congress, because I've seen in congressional talk this is a factor in the whole commodity and security debate. So we're the only ones getting this right. And Untraceable says, I'm guessing that as lawmakers usually are, they are ignorant and assume Bitcoin crypto is fungible, much like the myth that Bitcoin is private or anonymous took almost a decade to be dispelled. Yeah, so who knows how long it's going to take. And I don't know what the implications are going to be about this, because fair market value, the problem with fungibility, if you have a crypto that isn't fungible, is that not every crypto that you have is going to be the fair market value. Just like with gold. Like you have the spot price of gold, but you have different coins and you have different historical designs for different coins, and different coins may have different amounts of gold in them, and so it's hard to give a fair market value adjustment sometimes when it comes to gold. Now, if you're talking about bars of gold, and they're just the metal. It's not a problem. On the base layer, gold is fungible. But when it comes to Bitcoin, you have almost like a market ceiling for Bitcoin. That is the fair market value. And sometimes the value of certain crypto can be less depending on where you got it from or how you got it. So our corporations going to have a problem with this? Probably not, because they're going to implement every KYC thing possible to make sure that whatever crypto they do receive or have on their books is as clean as a freaking whistle, okay? So you want to transact with these guys, you better be on the widest list that you can get on, okay? Santa's nice list, it's a thing for crypto bros in the corporate world, okay? So that's just an interesting thing, right? What else is going on? Now, I know, again, this is a lot of regulatory talk. We're not talking about Bitcoin fees going nuclear and the death of Bitcoin, or even really the glory of Monero, even though I did say a couple times it's going to go super hyper mega nuclear. But all this stuff, again, plays into the base case for the super hyper mega nuclear Monero philosophy. Not philosophy, but, speculation. Investment thesis, whatever you want to call it. And just another story, right? The Binance crackdown will be unprecedented bonanza for crypto surveillance. So that's what the Wired is saying, because according to the Wired, Binance's settlement, and if you remember, they got in some trouble recently. Binance's settlement requires it to offer years of transaction data to U.S. regulators and cops, exposing the company and its customers to a 24/7, 365 days a year financial colonoscopy. Right. And those, what does it say down here? One attraction of Binance as the company grew was the firm's freewheeling flouting of rules. As it amassed well over 100 million crypto trading users globally, it openly told the United States government that as an offshore operation, it didn't have to comply with the country's financial laws. Good luck with that. Oh, boy. Yeah, and you see how well that worked out. But yeah, you've got all these people now who were trading on Binance forever. And effectively what the U.S. government just found was probably $50 to $100 billion of taxable income to harvest from this information that they're going to get from Binance. Because they're going to go through the history. They're going to link people's wallets with their, taxpayer identification numbers. And then they're going to do their own calculations of capital gains taxes of what everyone was doing on there. And then they're going to put you as part of the grid. And by the way, the more people that they're able to link with their wallets, the less private that you, as somebody who otherwise could be private, can be. Because there are less people out there that you can trade with and not get on the system. And if those people are compliance bros and they know about this whole 8300 form thing, you give them $10,000, they're going to report you to the IRS, because if they don't, maybe there's some chance that they're going to get fined for not filing that report. You see how Soviet this is, right? So the less private your network is that you're part of, the less private invariably you become. So let's read this. This is from John Reed Stark. Binance's settlement requires it to offer users transaction data. One prosecutor who asked not to be named calls the degree of access of Binance records as kind of crazy and remains in disbelief at the idea of Binance abiding by the settlement. Yep, if Binance does comply, the prosecutor adds that it would be a game changer in taking down transnational syndicates doing evil deeds. So Binance has given it up, and guess what? It's not just Binance. Some of you may remember this story. Kraken has notified account holders en masse today that they will be turning over cryptocurrency transaction information to the IRS in entirety on their users. Name, date of birth, tax ID, address, and transactions from 2016 to 2020. Okay, so that's Binance, that's Kraken. You're talking about at least a few hundred million people, okay, who are caught up now in these webs. Now, interestingly enough, I never really used Kraken or Binance that much. And if I did, by the way, I'd report everything. But, yeah, I mean, they're getting all this data. Now, in a way, that's good for us because they got some other people to focus on, hypothetically. But, yeah, that sucks for all these people. Because if you weren't reporting your capital gains and all that stuff, this would be kind of a reason to worry. Because if they catch you and they calculate their own version of capital gains and you can't defend against it, guess what? If you made those mistakes back in 2016, 2017, you're going to have 5-6 years of accrued interest and penalties that compounded on itself. Okay, it's going to be major problematic. So that's what's going on. They want your info. Now, this is Alex Jones, General Jones. He's got something to say about parallel economies.
Vote Democrat at first, but then they're going to force you into this. And they can say, oh, for your social credit score, just agree to vote Democrat at first. But then it's going to get a higher and higher benchmark you got to make to, in their system. You got to be sterilized, down to signing a date in the future to be euthanized. I mean, they admit these are their plans.
I mean, they're doing the euthanization.
In Canada, place, yeah.
Yeah.
No, they're definitely phasing it in, saying, oh, yeah, that's a whole other discussion. So here's what I'm saying. Building alternative economies while you fight in this system and not complying at a certain point, because when the social contract's broken, they're not used to clean-cut, smart, hard-working people breaking the law. And I've never broken the law. I'm simply telling listeners, when we get a government that's pure tyranny and a cashless society, that its whole system is the science of tyranny and designed to oppress us, it's called civil disobedience. When tyranny is the law, following the law is oblivion. So
I agree 100%. Let's build those parallel economies with Monero so that when they do come after Monero, the infrastructure is already built. And if you have private economic networks where people are self-sufficient because they're trading with each other outside the system, look, that's a very difficult thing to take down. And furthermore, it's important to become part of this network because in this network, you've got a lot of really smart, talented, hardworking people. And I've talked with a lot of you guys, and it's an honor to be in this kind of environment with you and this kind of initiative to build this parallel economy and to get this kind of thing going. And look, if you guys need help building your business, you guys want to know information about what you need to do in order to get this thing up and running so that you can accept Monero for whatever thing that you're doing, get in contact with me so I can help you out. But this is something very important for us to do. This is a way that we can help each other through this crazy time that we're living in where we've got these communist Bolshevik bros wanting to take over our country, wanting to pillage everything through unrealized capital gains taxes, who want to just unbelievably take everything you've got. And it's not just money, it's your soul, it's your spirit, it's your life force. They want it all because they're a bunch of just satanic wackos who want control over everything. So use Monero, get out of the system, and build something. In climate finance, this is Ursula von Nazi. In client finance, we have to move from billions to trillions. To get there, we need sources of revenues. And this is the president of the EU Commission. New levies, green bonds, and of course, carbon pricing. So I don't know if you guys remember this video that we did probably two and a half years ago with Janet Yellen, who was saying that we're going to have to raise, I think she said like, I'm not making this up, go look it up. It was like $100 trillion to fight climate change. And she was comparing it to World War II and like, we need all the resources we can get. And notice how like, they mentioned green bonds. These are like the new war bonds, you understand? And when you're in a war against something, what do? You justify any way so that you can increase taxable revenue. So that's something to look out for, okay? They want new money for whatever ridiculous thing they can come up with. We all know that's a scam. We all know it's a scam. If it wasn't a scam, would you trust the government to wage a successful war against the climate changing? No, obviously not. It's a stupid tweet from Adam Back. Just read it real quick. Come up with your own thoughts. He thinks Bitcoin's going to $700,000. Okay. Good luck. We're at an hour and a half, so I just want to finish up a couple more tweets. I think that'll be a good show. Facts. Well, this is from Joel Venezuela. Give him a follow. He says, it's irresponsible to promote Bitcoin. Excuse me, I'm a little stuffy. This guy was a Bitcoin bro. He's been in crypto for a long time. He says it's now at the point where it's irresponsible to promote Bitcoin. I don't want people to get hurt. I love what Bitcoin stood for, but today it gives people a false hope. Bitcoin can only do 7 transactions. You know what? I'm going to skip this because I'm just tired of talking about Bitcoin. I really am. Look, use it if you want to. If you want to pay, $50 transaction fees and you want to have your transactions exposed to the world on a blockchain that can only be used to, anything you can, will, or do on a public blockchain can and will be used against you, that whole thing. If you want to do that, go ahead. I'm not going to stop you. And, Peter McCormick is wondering why poor people aren't adopting Bitcoin at a time when transaction fees are $50. And $50, by the way, is like some people's monthly income in part of the world, okay? So he's like, I've made films in foreign places, and, I've reached out to very poor communities, and I've wanted to sit down with them and get their take as to why they're not adopting it. It's like, dude, I live in, Nowheresville, Georgia, and I might have a few ideas as to why poor people aren't adopting this stuff. But at least he's getting out there and he's saying, hey, look, guys, we have a problem with getting poor people to adopt this stuff. We want to bank the world. We may want to figure out what our problem is because it's not working, right? And at least he says that the store of value thing is a hard sell. Okay, good. And I think that's a good take from Peter, as much as I may dunk on it. It's my Twitter account. You can go follow me. That's cool. Anything else I want to say? I don't think so. Let's go full screen. So the regulations are getting insane, as you guys can see. And this has been the trajectory for quite a long time. And there were some Cake Wallet developments I wanted to talk about because Cake Wallet's continuing to kick ass. Go Cake Wallet. If you live in Europe, I guess you can buy Monero as KYC free through the Cake Wallet. Now, I don't know how they did that. I don't know how they pulled it off, especially in Europe, where you can't even go on certain exchanges now to buy Monero. I guess you can go on Cake Wallet and buy it with cash. Cool. I don't think you can buy it in the United States with dollars yet, but we'll see what they do with that. But as much as we talked about the bad things going on here, there's a lot of great things going on too within our community. There's more businesses every day accepting Monero. Monerica is growing. The Monero circular economy is growing. There's more work being done on different private cryptocurrencies. I'm still excited and stoked about Zano. It looks like the date for Zarkanum was pushed back a little bit. They were supposed to have it done before the end of the year, but they got caught up in working on the decoy selection algorithm, from what I understood, in their most recent video Into the Xanoverse, which is a podcast that they do. And so they're working on things right now, and they don't have a concrete date as of yet for Zarkanum, which is their private proof of stake rollout, which is going to be interesting. I think it's going to be interesting, but I'm still stoked about the use case for Zano with the escrow contracts and with other things that could be built on it. It's going to be a private ecosystem where people can build on top of Zano their own private tokens and assets, and who knows what the use cases for those are going to be. It's pretty interesting, pretty good team, and I give it a look. And I don't want to spout it too much yet because until they roll out everything and things are established, I don't know how well it's going to work. It's a risky endeavor, just like with anything. And Monero is the most sure thing in town, obviously. But I think the more that we grow this ecosystem, the more coins we can use for different purposes that have privacy, the better. I mean, that's just sort of it's the base case for me. If any crypto wants to catch my attention, it's got to have a privacy element. Otherwise, I'm not interested. Because, again, it's not fungible. It's not money. Therefore, it's not going to work. It's really that simple. So that's all I have to say, fellas. That's all I have to say. Monero Mateo, Merry Christmas to everybody out there. I hope that you are able to spend great time with your families, with your friends. I hope that Santa comes to town and gets you something nice. And Happy New Year if I don't make a video before then. And to my ortho bros, I hope that the fast is going well for you, and I hope that nativity season is a time for you to get right with your prayer life and with your family and your folks. And I'm looking forward to the birth of our Lord. And I hope that this season is well, and I hope to see you in 2024 if I don't see you again in 2023. So, Monero Mateo, God bless all of you. Stay strong. Stay awesome. Love you long time. Bye-bye.